Friday, August 5th, 2022, Monaco 64, home of alternative economics and contrarian views. Yesterday we had the Bank of England. They raised rates by 0.5%, which was what was expected, but their forecasts for the next year or two were very gloomy. And I want to touch upon that today because I think what we're actually seeing is the detonation of Britain's debt bomb. That's what we're seeing. And before I start, I'd like to recommend a few videos that talk about this. Two of them were made by me, and one of them is from 2015, but it's a warning about the debt time bomb by Money Week magazine 10 years ago. Yes, in 2012, they could see it coming. It's about an hour long, and I highly recommend you watch that. The other two are from me, and I'll put them up in the cards and in the description, and also the Money Week one. One is Gold, the Pound, and the Debt Time Bomb. And that's from 15th of September 2017. And in that video, I talk about the Money Week warning. And then there's a warning actually from one of the guys who probably helped build this this debt bubble that is now detonating, and that's Mervyn King, the former governor of the Bank of England. He was governor from 2003 to 2013, and he warned about a debt bomb back in June 25th, 2020, when the Bank of England was on its massive QE program that basically lifted its balance sheet to over $1 trillion eventually by the beginning of this year, and we're going to look at that too. So, yes, I've been reading a lot about what's going on in the economy here in the UK, but this applies to everywhere else. I think this debt time bomb is going to be exploding everywhere else. But here, for example, yesterday, the governor of the Bank of England, Andrew Bailey, tried to pass the blame to all the crises that we've had recently, the Ukraine war, COVID. You see people in the mainstream press as well blaming energy companies for all the misery that is coming or is here already in terms of the cost of living crisis. And we're seeing a lot of other events, geopolitical events, like the brewing crisis between China and the US. And most probably it will be a crisis between the UK and China as well, because the UK always tags along with the US with that special relationship. So a lot of distractions out there. A lot of people have their own opinions of what's happening to the economy, why we have inflation. A lot of talk that is because of Brexit. But it's my opinion that it's all to do with this debt time bomb that really has detonated, in my opinion. And there's two ways to deal with this time bomb, debt time bomb. One is to let it collapse, the debt bubble, i.e., yes, default on it by a collapse. You raise interest rates to save the currency, but everything collapses in itself. Government collapses, businesses collapse, and I don't think politicians want that, nor does the establishment. So what they're going to keep doing is try to keep inflating as much as possible without burning the proverbial frog, so to speak, the frog in the boiling water, in the pot of boiling water. Right now it's getting really hot. They're trying to turn it down. The problem is that could lead to a hyperinflationary collapse, which is all the frogs are going to die. And by frog, I would say, I don't mean people, but the currency. The currency will collapse. Either way, you want to have protection for both events, and that's through anything but the currency. And it could be, as I said, anything. But I personally think it's very prudent to hold a little bit of physical gold and silver. Yes, it's prudent. It's imprudent to have a lot of big balances in your bank account, either during a hyperinflation or a collapse. You could see your funds disappear in either one. So now I want to go through some historical data that I think will prove to you that we are in unprecedented times in terms of debt, interest rates, and why what's happening now is the debt, that bomb exploding, and it's going to be painful. It's already painful, and basically we've been living beyond our means, not just our government, but also the general public, corporations. In the warning from Money Week, they talk about the fact that it's not just government debt that's gone through the roof. It's also personal and corporate debt. The UK has probably 1,000% total debt to GDP, but I'm going to focus on the Bank of England, who's trying to pass the blame to the symptoms of this, right? They're the ones who've made this possible, this debt bubble, because they have a monopoly on the currency, and they are legally allowed to create these currency pieces or reserves out of thin air. Even one of the founders of the Bank of England admitted that, William Patterson, back in 1694. It's not me making it up. So what I wanted to show you here, I found the percentage of GDP equivalent of the Bank of England's total assets on its balance sheet. Why is that important? Well, they buy these assets through creating funny money. Yes, it used to be that there was a backing to the money, to the currency, up until 1914, and that was gold. And they couldn't do this as willy-nilly as they're doing now. But if you look back here, it all started in the early 1700s at 5% of GDP. It's quite up and down, the amount of assets that the Bank of England has held. But suffice it to say, at the end of the 20th century, it was relatively low. It was in good condition. Ever since the end of World War II, Britain had been able to inflate away the debt, and the Bank of England was able to unwind its balance sheet. But as you can see, we've gotten to records here in 2016, and I had to dig for some information here from the Bank of England, and I also got something from Wolf Street. You can see that through the pandemic, the Bank of England's balance sheet doubled, really. It went from just above 550, and according to the Bank of England themselves, we were 1.13 trillion pounds as of February this year, end of February 2022. So if we go forward here, I've taken that new number, the 1.1 trillion in assets in the Bank of England's balance sheet, and I've divided it by the GDP. GDP for 2022, I've estimated it to be 2.276 trillion pounds. I took what the GDP for the first quarter was, multiplied it by 4, and then I took the assets on the Bank of England's balance sheet, and I divided it into GDP, and I came up to almost 50%, as you can see. I would say it's 50%. So if we go back now to that chart from the Federal Reserve, you can see how unprecedented this money printing or reserve printing, if you want to call it, is. It's off the charts. It's up to 50%. It never had gotten up even as far as 25% until recently, 2016. And what's that got to do with the debt bubble? Well, it's because the Bank of England knows that this debt bubble is detonating. And the biggest debtor in this country, of course, is the Treasury, the government. And the Bank of England is buying this debt. And that's why their balance sheet has gone through the roof. So I would say if you look back at that first chart, since the beginning of the century, they've printed the equivalent of 45% of GDP. And that's what's causing the collapse of the currency, the British pound. That's what is causing the rising prices. The rising prices are not causing inflation. Inflation is what the Bank of England has done since the beginning of this century by basically printing 45% of GDP. Can you imagine if you and I could just create as much currency as we wanted and went out buying things, how disrupted that would be? And here you have an institution composed of a dozen people who run it, creating 45% of GDP for a country that has, I don't know, over 60 million population. It's crazy. And that's why we have the rising prices. It's not because of greedy corporations or the war in the Ukraine or COVID. The spotlight is on the Bank of England. They're to blame for this debt bubble. So let's continue here. I wanted to show you interest rates now. The Bank of England policy rate, or the base rate, which they raised yesterday. And a lot of people are alarmed that it's the highest it's been, that the 50 basis point hike is the biggest that we've seen since 1998. But I can tell you, we're still at very low levels. And again, this chart only takes us back to 2018, but you can see that we're not even back to like 2.5%, which had been up until the '08 crisis, the historical low level since the formation of or founding of the Bank of England in 1694. And I think prior to, well, actually, up until now, in the last 300 odd years, it's averaged around 4.8. So the fact that we're still at 1.75 is very alarming. But the most important thing here is when you look at the Bank of England's balance sheet, the debt load that this country has, do you really think we can go back up to like almost 17.5% that we went in the early 80s in order to crush the inflation back then? No, if they go to that level, everything will implode. The economy will collapse. We're already hearing about people having problems with their mortgage payments. And it's going to get worse because we got almost 2 million people on 2-year fixed rates. Their rates are coming due in the next 18 months because they took all these very low interest only mortgages back in 2020 and 2021. And the mentality has been, because we've had 12, 14 years of very low interest rates, that rates would never go up, but unfortunately they are going to go up. The only upside is that before they get to 10%, everything will have imploded. So I think now the experts think that 3%, do you really think that a 3% rate, when you look at this chart, will help solve the inflation and debt problem? I don't think so. So there you go. Yes, a lot of distractions out there, political distractions, right? The Conservative Party leadership contest. I think Liz Truss is saying she can bring the economy back to growth. She's going to cut taxes and everything will be fine. Well, how can you cut taxes when the government is up to here in debt, when the Bank of England has printed 45% of the economy, of GDP, when interest rates are rising? This problem is intractable, I would say. It's a matter of mathematics. When the debt gets too big, there's no way out, unfortunately. And it doesn't really matter what party is in power. And that's what the Money Week video talks about. It doesn't matter if it's left or right. And in the current situation, it wouldn't have been any better if the other party was in power. So with that, let's quickly look at where the markets are this morning. It's 8:23 a.m. London time. We've got spot gold at 1790.50. It's down actually less than $1. Range has been 95 to 88. Silver is up slightly, a couple of cents at 20.20. High's been 33, low 13. The Dow futures is up 65. The NASDAQ futures is up 27, and S&P is up 6 points. The FTSE 100 index is down 20. Eurostoxx 50 is unchanged, actually. To the currencies, sterling is unchanged, 121.58. The euro is down slightly at 102.32. The yen is dollar yen is up a third of a percent, 133.27. The dollar is up slightly versus the Swiss franc, 95.67. And the dollar is unchanged versus the yuan at 6.75. Dollars unchanged versus the ruble at 60.50. So we're stuck around that 60 level, dollar versus ruble. To the rest of the currencies, Aussie dollar is unchanged, 69.70. The dollar is unchanged versus the Canadian, 128.67. And the Kiwi dollar as well, unchanged at 63.01. General commodities, we've got WTI crude up 2/3% at 88.58. Brent crude is up 0.5% at 94.20. So a lot of people are probably going to say as well, oh, energy prices, oil prices are coming down, so inflation is going to come down. No, it won't. You've seen that this is a debt problem, and we're seeing it collapse right now, and there's no way out. Anything but the currency, right? So I expect hard assets to continue to do well. Yes, they're going to be choppy in the short term. High-grade copper up 1.6% at 354. U.S. nat gas is unchanged at 811. Let's check that Dutch nat gas futures, see where we are. Well, that's back above 200. It's at 202. To finish off, let's quickly look at the 10-year yield and the U.S. Treasury curve or bond market. The 10-year is up about 2 basis points, around 270. The 2-year is up 2 as well at 305. So 35 basis points inverted. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And with that, I wish you all a great weekend. Take care. Bye.